If you are an aspiring entrepreneur, there is a 90% chance that you might have gone through these stages or is going through the stage where you wanted to register your business and you are not sure which type of registration is the best suitable for your business. Well, there are a few different options that are available to us in India, and each one holds its own merits and demerits. We will go through these different registration options and understand what is the best suitable option for your business.
If you are the sole owner of your business, then it is very easy to start a sole proprietorship. It requires no formal registration. You can pick any name of your choice, no approval required. It is not a separate legal entity. Owner and the business are considered one and the same. Unlimited liability. If there is some kind of loss in business, the owner has the obligation to settle it from his personal assets. It can have only one member. Accounts has to be audited by a qualified chartered accountant if the turnover crosses 50 lakhs for professionals and 1 crore for other businesses. There is less compliance related activities as there is no formal registration. GST returns might be required if you have opted for the same. Estimated setup cost for a sole proprietorship is 2000. If you are worried about your unlimited liability clause of the sole proprietorship and does not like to risk your personal assets, then we have a better option. One-person company. It requires a formal registration with the Companies Act 2013. Name must be approved by the Registrar of Companies. It is mandatory to have a unique name with no much similarity with an existing company. It is a separate legal entity and it is treated as an artificial judicial person. Limited liability. Owner's liability is limited to the extent of capital contribution, thereby protecting owner's personal asset. There will be only one director and one nominee director for perpetual succession. Accounts has to be audited by a qualified chartered accountant. Annual filing in compliance with Companies Act and GST returns are mandatory requirements. Estimated setup cost for OPC is 8,000 rupees. If you are planning to do business along with someone else, then the easiest option is to start a partnership firm. Registration is not mandatory for a partnership firm. However, if the firm is not registered under the Partnership Act 1932, the firm will not have ability to sue in its own name. No approval required for the name chosen for the partnership firm. A partner's action makes other partner accountable as he or she acts as an agent for other partners. Unlimited liability. It should have minimum 2 or maximum 20 members, 10 in case of banking business. Audit is required only if turnover crosses 25 lakhs in case of professional services and 1 crore for other business. There is less compliance related activities and GST return might be required if applicable. Estimated setup cost is approximately Rs 3,000. Again, if you wanted to enjoy the ease of doing business with the partnership firm as well as mitigate the risk of unlimited liability, then you should consider limited liability partnership. LLP requires formal registration under the Limited Liability Partnership Act 2018. Name must be approved by the Registrar of Company. It is a separate legal entity and has limited liability features. It can be formed with minimum 2 and maximum 100 members, restricted to 10 in case of banking business. Accounts needs to be audited if turnover exceeds 40 lakhs and if capital contribution exceeds 25 lakhs. Annual filings with Registrar of Companies are mandatory along with GST return. Setup cost estimated is approximately 8,000 rupees. A traditional and a more formal setup are the private limited and public limited companies with share certificates. First, let's look at private limited companies. Formal registration required under the Companies Act 2013. Name must be approved by the Registrar of Companies. It is a separate legal entity with limited liability features. It should have minimum 2 members and can have a maximum of 200 members. It has a mandatory audit requirements. Share subscriptions can be invited from friends and family. There are certain restrictions on share transfer. There are more compliance requirements including annual filing, annual general meeting, board meeting, GST return, etc. Setup cost is estimated to be approximately Rs 10,000. In case you are inviting share subscriptions from a general public, then you have to go with public limited company. Formal registrations are required under the Companies Act 2013. Name must be approved by the Registrar of Company. It is also a separate legal entity with limited liability features. It should have minimum 7 members and no maximum limit. Audit is compulsory. Share subscriptions are invited from general public and share can be transferred to any person. Highest in compliance with annual filing, annual general meeting, board meeting, GST return, etc. Setup costs vary with complexity including initial public offering. In case you would like to know more or require any support in setting up your business, please do contact us. And please do not forget to like and subscribe to our channel. Thank you.